Hi, I'm Jim Hudson, owner of Lone Star Best Insurance. Welcome to my podcast. Make sure to like and subscribe and hit that button below for more things and all things insurance here in North Texas. I'm the Insurance Cowboy. We're going to be keeping you up to date on all things insurance. Today we're going to be talking about homeowners insurance deductibles, and how they affect you, and also umbrella coverage. What is an umbrella? Do I need an umbrella if I don't have one? And then lastly, we'll finish off talking about telematics. The telematics program can really make a difference on your auto insurance. So let's get started. Let's talk about homeowners insurance. When it comes to homeowners insurance, especially here in North Texas, there are a lot of things that affect your rate. Homeowners insurance here in North Texas is so expensive because we pay out more in claims than we take in when it comes to your insurance dollar. In fact, for every dollar of insurance that you pay, the insurance companies pay $1.45 in premium to cover your claims. Now, what is it that's affecting your homeowner's insurance? Well, traditionally, it's things like hailstorms. You get hail on average 2 or 3 times a year, not always in the same place, but that means that homes here in North Texas are getting new roofs about once every 8 years. Wind is also a big factor. Not everybody gets a tornado, but storm damage can really affect and damage your home. And that's why we're paying so much for insurance. Cheap insurance can also hurt you. Now, when I say that, what I mean is cheap doesn't mean inexpensive. It a lot of times means cheap. How is my insurance company getting my rate so low? Probably because you're missing key coverages that you're going to want or need when a claim does occur. Roof coverage. Now, when it comes to roof coverage here in North Texas, a lot of times people don't realize there are multiple types of coverage or ways that your insurance company is protecting your home. One of the ways is most commonly what most people expect, and that's replacement costs or full replacement. Now, what do I mean by that? When you have a loss, they cover everything and you pay your deductible. They fully replace it. There are a couple other coverages that are, I guess, key to policy here in North Texas. One of them is actual cash value, or what's known as scheduled value. Now, what that means is your roof is covered very similar to the way your car insurance works, meaning that when you do have a loss, they're not going to fully replace your roof. What they're going to do is they're going to value it based on how old it is, just like they do whenever you get into a car accident. So the way they do that, the way they determine the value, is they apply a schedule based on the number of years in age of your roof. An example would be a schedule of about 2 to 3%. That's what you most commonly see when it comes to insurance carriers here in Texas. So when you think about it, if you've got a 10-year-old roof and you have scheduled coverage, let's use the example of 3%. They're going to apply a schedule of 3% each year, meaning that on a 10-year-old roof, they're going to deduct 30% of the value of that roof before your deductible is applied. So the example I will use would be on a $30,000 roof replacement, 10% schedules, 10 years with a 3% schedule, 30% off that. Now all of a sudden your $30,000 roof is only going to get $20,000 for the replacement. And then they're going to apply your deductible. So if you've got a $300,000 roof, home with a 2% deductible, which is most common now, they're going to first apply the schedule. So your $30,000 replacement is now down to $20,000. And then that 2% coverage on a $300,000 roof or home is going to basically be applied. So 2% of 300,000 is $6,000. So your $20,000 replacement is now reduced down to $14,000. So you started out at $30,000 with full replacement cost, but now with the actual cash value or scheduled roofing, you're getting $14,000 to replace your roof, which means you're paying the rest of it, that other $16,000. That is scheduled roofing. And that's why most customers don't realize or feel the effect of that until a claim happens. because they didn't take the time in the beginning to make sure that they fully understood how the coverage works. Now, you may be thinking, what can I do to offset that? There are a couple things you can do. Most times, scheduled roofing is going to be your only option when your roof is 10 years old or older. That's the way most insurance companies here now are paying for or charging when it comes to roofs. Meaning, if your roof is older than 10 years, that's going to be your only option. So one way you can offset that is you can actually buy a policy now that will pay a portion of your deductible. It's deductible insurance, and it will pay anywhere from $8,000 to $10,000 towards your deductible to help lessen the effect or lessen the pain that you'll feel when you do have a claim on your roof. Things that you can do to offset this also is when you do get a new roof, go ahead and discuss with your roofer the option of getting hail-resistant shingles put on your roof. Class 3 or Class 4 hail-resistant shingles will give you not only a deductible on your insurance, which can be substantial, it can save you hundreds of dollars for the year on your home insurance, but it also makes your roof more, I guess, defendable, if you will, or it will defend your roof in the event of that hailstorm where normally the maybe marble size hail would have caused you to need a new roof. Well, with the Class 3 or Class 4 shingle, it's going to be able to stand up to that hail to where it's not going to be affected. Look at your policy and make sure you're talking to your agent about it. A lot of agents or agencies I see now are selling based on price. And we definitely want to save our customers money. But honestly, when it comes to having protection, don't make sure that you're worried about protection when it comes to the claims time. Look at it ahead of time. Go over your policy with your agent and make sure he's explaining or she's explaining the kind of coverage you have. Because there are going to be gaps or there's going to be exposures that you may not be aware of until that claim occurs. And the adjuster's standing there in front of your house explaining to you all the things that you don't have in the policy. You're going to want to talk about the water damage limitations because when it comes to roof leaking and damage happening inside your house, not all policies cover that. You're going to have a deductible outside of wind and hail. It's what's known as all other or all other things, such as fire, pipe bursting and flooding your house, someone breaking in and stealing your stuff, things that happen other than a windstorm or a hailstorm. And those deductibles are separate from your wind and hail. Insurance is about protecting you and not just about price. The reason why we have to have insurance is because we can't afford to cover major losses on our own. So make sure you have the right coverage when you need it. One of the other considerations when it comes to insuring your home or making sure that you have the right coverage is looking at bundling your coverage. Insurance companies prefer it when customers have multiple policies with them, their auto, their home, and even a personal umbrella, or the other things that you have in your life. Your toys, your four-wheeler, your boat, motorcycle, things like that. So the more you bundle, the more you're going to be attractive to your insurance company, and they'll be able to give you other discounts that you may not have qualified for. Another thing that customers don't realize is there's something known as an insurance score. Now, this isn't talked about because it's kind of a behind-the-scenes thing that insurance companies use to determine whether or not you're a good risk, and also whether or not you're going to get a better rate. Now, what are some of the things that affect your insurance score? Well, one of the things is the amount of claims that you have on your home. Nationwide, homeowners go 17 years between claims. So if you're having a claim every 3 to 5 years, then you're a much higher risk to that insurance company than the average homeowner. Now, I say average around the country. Here in North Texas, we have a roof or a home claim every 8 to 10 years because of the amount of storms that we experience here in Texas. One thing about your insurance score that most people don't realize is switching companies. When you switch companies every year or every couple of years, Insurance companies don't like that because they look at it like they're going to have you for a year or two. They're going to offer you a low rate. Then you'll have a claim. They pay out $30,000 for your new roof in the example that we talked about earlier. And then you're going to be off to the next carrier. So they never have an opportunity to recoup their money. And I know you may be thinking, well, they're making a lot of money on me. Remember what I said earlier? Here in North Texas, for every dollar of insurance premium that the insurance companies collect, they spend $1.45 in coverage. Now, that's not a good business model. And there's not a company out there that can last very long with that kind of expenses. So let's go ahead and shift gears a little bit, though. I wanted to talk a little bit about the customer where, this whole situation with claims and your insurance deductible can truly affect you. And this is where knowing your policy can really come into play. I had an opportunity to do a coverage review for one of my customers. She is a widow. Her husband was the one who handled the coverage for her family year in and year out. So we were used to dealing with her husband. Well, when he passed, she had to take over dealing with all the things in her home. And insurance, of course, was one of those biggies. When we were doing the coverage review, one of the things I noticed was that her current policy that was not with our agency had her with a 5% of her insurance on her home insurance. Now, she has a very nice home, it's a modest home. The rebuild or the value of the home was about $280,000. Now, you think about it, a 1% deductible on a $280,000 home means that you have a $2,800 deductible. But let's do the math on that 5% deductible with that same home. You look at what's it going to cost me if I have a 5% deductible. Well, if you've got a $280,000 home, we'll multiply that times 5%. That means her deductible is $14,000. And the average roof is anywhere from $25,000 to $30,000. So when you look at that, that means she's paying half of the cost to replace or to protect and cover her roof. Most customers, I don't know about you, but I can't afford to put $14,000 out to replace a roof like that. And now she's down to a single income, she's definitely not going to be able to do that. Good news, as an independent agent, we have several carriers that we're able to offer coverage with. And while they all have different prices, they also have different coverages. So one of the things that I do as an independent agent is I take the time to go through and rate and quote every one of those companies for my customers before we get together. And look at what's the best price that we can find. So what are going to be the coverages that are important to this customer and make sure that they have the best coverage for the best price. That way, when we get together, we have an opportunity to go over in detail and make sure that your insurance plan is truly tailored to you. That's what I feel is important. When here at Lone Star Best Insurance, one of the things that we do and we specialize in is taking the time to customize the customer's policy to their needs, but also to their wants. Because everybody has different needs, but also everybody has different wants when it comes to protecting their assets. So make sure that you have an agent that's doing that for you. That's what you deserve, especially when you're spending as much as we do here in North Texas. The average home premium that we see here is anywhere from $2,800 a year up to $6,000 on the average home. And I've seen it go as high as $15,000 to $20,000, depending on the value of the home. So make sure you're talking to your agent and that they're doing it. One of the other things I wanted to talk about today was on the deductible side. And what is my deductible costing me, and how did they come up with those numbers? Well, like we said earlier, when it comes to wind and hail exposure here in Texas, you're going to be lucky if you can get anything below 2% anymore. 2% is the standard now here in Texas. The other thing, like I said, as far as roof coverage goes, if your roof is over 10 years old, you're going to be lucky to find any coverage out there or any company that will offer you full replacement costs on your roof. So make sure you're having that conversation with your agent. Lower premium doesn't always mean better protection. Sometimes lower premium means cheaper, and you and I both know what cheap means. When I was growing up, cheap meant it wasn't worth a dollar. It was just cheaply made. So Let's go ahead and shift gears out of homeowners insurance. We're going to talk about personal umbrella insurance. Now, umbrella coverage, the way I like to look at umbrella coverage is think about a literal umbrella. When you go out in the rain, what does an umbrella do? Well, it covers over you and anybody else that's under that umbrella, doesn't it? That's the way personal umbrella or umbrella coverage works. Now, I say personal umbrella, you can get a commercial or business umbrella, which would cover your business, and or you can do a personal umbrella to cover all your personal exposures. Now, what do I mean when I say personal exposures? Think about all the things that you do and have personally. Your car, your home. If you have any toys like four-wheelers, motorcycles, jet skis, or boats, it's going to cover over them. Remember the umbrella analogy. So everything that's underneath that umbrella is going to be covered. And what does an umbrella cover? Well, it can cover two things. It can first cover your liability exposure. Now, when I say liability, what is liability? Well, when you are or at fault, then your assets are exposed. And when I say that, what I mean is your assets are all the things that you work so hard for. Your bank account, so the cash that you have on hand, your bank account in the form of your retirement money. So if you have a 401k, if you have an IRA, if you have a 403b, if you happen to be a teacher, all the money that you work so hard for to grow your retirement, that's exposed in the event of a judgment. Then some of the other areas that are exposed is your house itself. Now, good news, here in North Texas, or in Texas in general, they can't take your home from you in the event of a liability exposure. We have the Homestead Act that basically says they can't take it. But if you're in a liability situation where you're at fault, you can have a judgment issued against you, and before you're able to sell your property, that judgment's going to have to be satisfied. Otherwise, you're not going to be able to sell your property, take that asset or the equity that you have, and use it for other things. Your autos, anything above $30,000 individually or $60,000 for multiple cars, the court could make you sell those or use those assets to help pay off the judgment. Other property that you may have, whether it's other property that you may have, like maybe you have some land, maybe your family has some land, or any other assets will be exposed as well. And then one of the last areas that's exposed is your income. You know, people don't ever think about it, but it's hard to live on what we make today. Imagine being able to or trying to survive on 25% of what you earn. And when I say that, what I mean is if you were to cause damage or injury to someone and you didn't have enough insurance to pay for that damage, the courts could basically award that other individual to where you have to pay them 25% of your income monthly. So if you're making $100 an hour, now it's on. So if you're making $100 an hour, now all of a sudden 25 out of that $100 is going to that other person to pay for the damage that you caused. That's how severe this can affect you. So talking to your agent about your limits is very important. The state's only going to require that you cover $30,000 per person when it comes to auto liability, $60,000 for the total accident, and then $25,000 in property damage. Now, what does that mean? That means that if you get into an auto accident with a new Ford pickup, and that Ford pickup is a $70,000 truck, you've got the state minimum of $25,000. Essentially, you've got a $50,000 deductible, meaning that your insurance company is going to pay $25,000 in your behalf, and then that other party that you injured is going to come after you for all the balance. That's where these Jim Adler and other attorneys that you see on TV, that's how they make their money, is going after people who didn't have the right coverage, or even going after insurance companies to make sure that they can make their customer whole. Now, when it comes to a personal umbrella, how does that work? Well, like we talked about, it covers everything that's underneath that umbrella. So in the event of your car insurance, they are going to make sure that you have a higher limit before the umbrella kicks in. So most companies are going to require that you carry $250,000 per person, $500,000 per accident for injuries, and then $100,000 in property damage. So then the umbrella will kick in above that with $1 million or more. Usually $1 million to $5 million is going to be the amount for personal umbrella. And so now all of a sudden with the personal umbrella, if you injure someone and cause major damage, which by the way, the average injuries on awards, and the data I have is about 10 years old, is $486,000. Now, what does that mean? That means on average, when a liability judgment is awarded for an auto accident, the award given is $486,000. So back to that point I was talking about earlier, if you've got only $30,000 per person and $60,000 per accident, you can see real quickly that that $30,000 isn't going to go very far. But if you have a personal umbrella, you're going to have $250,000 per person and then $1 million above that. And that combines. So now you have $1,250,000 or $1,500,000 for the total accident. So now when you're looking at that average award of $486,000, that $1.5 million is going to be plenty of coverage to protect you and to protect all your assets. When it comes to home liability and the personal umbrella protecting your home, you may ask yourself, well, what could happen in my home that would cost so much or that would cause that kind of a loss? If you have a swimming pool and your son or your daughter has friends over and they're swimming and something happens, God forbid, one of the kids jumps in the pool and paralyzes himself or seriously injures himself, or even maybe dies, they're not going to sue for $100,000. On average, they're going to sue for a lot more than that. And the average homeowner's policy on a personal umbrella will carry $300,000 for the underlying coverage, and then the $1 million umbrella is above that. So combined, you're going to have $1,300,000 to protect any liability award like that. Other common liability awards when it comes to homeowners are dog bites. If you've got a companion and he gets a little feisty or cranky and bites somebody, and they come after you, that $300,000 may not be enough. It may not go very far. So that $1 million is going to insulate you and protect your assets from being exposed. Same thing, we talked about your toys, your boat. If you're out on the lake and your daughter brought her friends with her for the weekend and one of them drowns or something happens while you're pulling them on that tube, maybe you hit a log in the water that you didn't see. I mean, there are so many things that can happen. And as an insurance agent, I stopped trying to outguess what could happen because there are things every day that I see that I didn't see before. And that's after doing this for over 30 years. So make sure that you're talking to your insurance professional about these kind of protections. Because I know also while we're talking about this, you're probably thinking to yourself, oh my God, what is that going to cost me? Believe it or not, a personal umbrella on average is usually only about $50 a month or less. I did a personal umbrella for a customer the other day that had 3 cars in a home, and it was $500 for the year. So it's that inexpensive to give you $1 million worth of protection, or what I would also refer to as true peace of mind. Umbrellas are also one other thing that you can do with a personal umbrella is you can cover yourself and protect yourself. We're talking about protecting people if they come after you when it comes to liability awards. But what about me if I get injured by somebody who hits me and they don't have enough insurance? And let me use a real world story that happened to one of my customers. Now, this happened to them while they were insured with another agency. Have a customer that doing pretty well for themselves. The husband bought himself a nice Harley. They have a nice home in North Richland Hills, Texas, and a couple of cars. Wife drives a Volvo, husband drives a BMW, and the husband goes out for a nice ride one day on his bike. And he's riding around here in North Texas, doing a little shopping, just enjoying the day. And as you all know, we have these roundabouts everywhere. Don't know what you think about them, but that's a little different conversation. But he's going through a roundabout, and a young man who's recently licensed about a year before with minimum liability limits comes through that roundabout and does not yield and hits this gentleman, not knocking him off his Harley, totals the bike, but severely injures his customer. Injures him so bad that he was hospitalized for several months. He did survive, but now he's disabled for life. Now, when I say disabled, he's physically disabled, so he struggles walking, but he's also mentally disabled. This poor man cannot do his job that he used to do, where he was earning a six-figure income. That income that was providing the good standard of living that they had. And now they're trying to survive on one income, the wife's income. They're getting by, they're doing okay, but they're not half as good as what they could be or where they should be. Now, let me explain to you how personal umbrella would protect you in that case. You can add coverage for uninsured motorists or underinsured motorists onto your personal umbrella. Now, how do you do that? Well, the first thing you do is you raise your underlying limit or the limit on your car or your motorcycle for uninsured motorists up to $250,000 per person and $500,000 per accident. So that way, God forbid, if someone without insurance or someone who doesn't have enough insurance hits you, you're going to be protected for up to $250,000 per individual and $500,000 or $500,000 for the total accident. Now that personal umbrella, when you add coverage for uninsured motorists onto it, you now have $1 million above that $250,000 per person. So in the example we're talking about for my customer, instead of being without coverage and without protection, because remember, that youthful driver only had $30,000 in coverage, that's all his company paid for him to be whole, for our customer to be whole. And their only other option then was to sue and go after that young man, which, we talk about not having enough coverage and how it can affect your assets. Well, if you're a single 19-year-old and you have nothing, it's hard to go after that. Now, they could garnish his wages, but how much is that really going to make our customer whole? Even if they get 25% of his wages for the rest of his life, or the rest of his working life. So that's where adding uninsured motorists onto your personal umbrella can really come into play. Now, all of a sudden, had that same incident happen, our customer would have $250,000 for his injuries on his motorcycle policy, and then that $1 million above that. So now all of a sudden, he's got $1,250,000 to pay for his initial injuries, but also to pay for the pain and suffering component that liability insurance pays for. So instead of having to try to rely on Social Security disability, they would have had enough insurance to continue to live comfortably in the lifestyle that they had grown accustomed to. That's why you want to talk to your insurance agent about personal umbrella. It can do the things for you that you've never thought or imagined. And you're probably also thinking, well, that's not going to ever happen to me. That's what my customers thought too before it happened. So insurance is not for the it's going to happen. It's for the what ifs, the things that you don't imagine happening. And honestly, in my opinion, if you can afford a motorcycle, if you can afford these toys, and then you need to be looking at things like the personal umbrella and talking to your insurance agent about it. Because, like I said too, anywhere from $25 to $50 a month can make you whole again, can give you that kind of protection. That not only gives you the peace of mind, but it makes it to where a good day doesn't become a bad life. Bad day, I should say, not a good day. It makes it to where a bad day, that motorcycle accident, doesn't become a bad life because you didn't have enough coverage. Let's move on to the last topic that I want to talk about today, and that's telematics. And telematics is a feature or a coverage on your automobile policy. Now, most insurance companies out there, most insurance companies are offering some form of telematics and telematics coverage. Now, why is that? Well, you think about it. Let's pretend for a moment that you're the insurance company. So you're taking your millions of dollars and you're putting it out there. And you're saying, Mr. Customer, if something happens, we're going to be there to protect you. And we're going to charge you $100 a month to do that. How do they know it's $100 a month to make sure that you're protected and that they're still making money, if you will? Because every insurance company is just like any other company out there. They're in business to earn a living, to make money. Not necessarily to get rich, but to make money. So when it comes to telematics, Telematics is a way for them to be able to estimate what it's going to cost to insure you so that they aren't undercharging or overcharging. Now, in the past, the way insurance companies did that was they used things like your driving record, how many tickets or accidents you had in the 3-year window. They use things like, are you a homeowner? Are you married? Or are you single? How old are you? Now, you may be thinking to yourself, what does it matter if I am or if I'm a homeowner? Those items are usually indicators of responsibility because we know that a gentleman that is 18 years old and single is probably a lot less responsible than a man who's 45, married, has a solid job, 3 kids, owns a home and has a mortgage. The responsibility factor is a lot different. And so insurance companies take different factors to try to determine what their likelihood of paying out on a claim is. Now, tickets or accidents also factor into that because they know, statistically speaking, that someone that's had an accident in the last 3 years is a lot more likely to maybe have another accident than someone who hasn't had an accident in 10 years. So in the past, those are the things that insurance companies would use to determine what their exposure or what their risk was when they would insure somebody. Nowadays, with computers and with AI, we have algorithms that will help calculate those things. But one of the things that they've started using is telematics. And what is telematics? Telematics is essentially a way for the insurance company to look at you exactly. Who are you and how do you drive? What are your habits? Do you use your phone while you're driving? Are you Facebooking or, maybe on chat while you're driving? Those things, believe it or not, are more dangerous than DWIs. They cause more accidents and more death in the United States now than someone who drinks and drives. So I know you may not be thinking about that, but that's how deadly these habits are. So what telematics does is it gives an insurance company the opportunity to look at your habits. Do you speed? Do you use your phone while you drive? Do you race up to the stoplight and then slam on the brakes, or what we refer to as hard braking? Are you a rapid accelerator? Do you take off from the light where you throw everybody in the car back against the seat? Your driving habits determine how often or how likely you are to get into an accident, which then gives the insurance company an opportunity to look and see how likely they're going to be to pay out on a claim in your behalf. So I know a lot of people nowadays say, I don't want the insurance company to track me. They don't need to be tracking me. Are they tracking me? Look at it like this, guys. Everybody's tracking you now. If you've got a smartphone, like all of us do, you're being tracked. You may not think it, but you're being tracked by everybody. One key way to discover that is start talking about the subject that you usually don't talk about. Maybe you talk about shopping for kitty litter. Next thing you know, on Facebook, you're seeing all these ads for kitty litter. So you're being tracked and you're being monitored every day. You just don't realize it. This is a way for you to take advantage of the tracking that you're already being done and you're already receiving. Now, there are 2 different ways that insurance companies will, quote, track you. One of them is through a mobile app on your phone. What you do then is the insurance company has their own individual app. You download that app. Once downloaded, then it runs in the background. You give it permission by always allow, and then it runs in the background to be able to monitor your driving and your habits. And it does it by each route that you drive. And when I say each route, if you drive from here to the store, that's a route. Then when you drive from the store back home, that's a route. When you go from your home to work, that's a route. When you go from work to a friend's house on the way home, that's a route. Every route that you drive is measured and monitored. And you can also, when it comes to the apps that are on your phone, you can go into them and you can say, hey, I was a passenger in my friend's car. I wasn't driving. That way, the habits that were measured on that route are not held against you. Maybe you're a passenger while your husband's driving. Then you can go in there and indicate that too. So make sure that if you do have the app on your phone, that you're checking it on a regular basis, because then you can basically adjust and change these routes so that you'll only be measured for the way that you drive, not for the way that the people that you're riding with drive. Now, I said there's two ways that telematics can measure you. The first, of course, is the apps on your phone, like we just talked about. The other is a plug-in device, most commonly used by companies like Progressive. Now, this plug-in device, Progressive refers to it as their snapshot device. It's a device little plugged in to the port that's on your car, usually right underneath your dashboard, underneath your steering wheel. It's very easy to find. You just plug it in, and it runs, and it measures the information along with your car and your car's computer. Now, the benefit of the plug-in devices is it's not a GPS device like the ones on your phone. Because the ones on your phone are measuring where you drove, what time you drove, and the habits that you had, like using your phone. If you were using your phone while you're driving, whether it's a phone call or maybe surfing on the internet, those kind of things. Those are technically, as you like to put it, or like most people like to put it, tracking your behavior, where the plug-in device is only measuring three things. It's measuring your braking, like we said, your hard braking. It's measuring your speed, and it's measuring your rapid acceleration. So the plug-in device is a lot less evasive when it comes to, quote, tracking you. It's not a GPS device. It doesn't know where you are. So it doesn't know if you're speeding, as an example, because it doesn't know what the speed limit is where you're driving. It can tell the time of day. It can tell the distance you drive. And it can tell if you hard brake or if you rapid accelerate, but it doesn't know how fast you're going in the sense of versus the speed limit, like the mobile app does. So it's a lot less invasive. If you're wanting to take advantage of the discount on the telematics program, that would be the way to do it if you're worried about being, quote, tracked by your insurance company. Because they're only monitoring those three items. They're not monitoring all the other things that happen. And it's not a GPS. So when it comes to discount, well, how much am I going to save on this? Most insurance companies give an upfront discount of about 15%. And the discount can go as high as 45%. Now, when you think about it, that's almost saving you half of the premium that you would normally pay on your auto insurance. Now, how do you maximize and get that 45%? Through good driving habits. I will admit that I myself do use telematics. Now, my wife gets frustrated a lot of times with the telematics and what it's measuring and what it's not. But we actually had our premium on our insurance policy go down by $350 last 6 months. How many of you can say that your insurance went down? That's a rarity these days with the amount of losses that the insurance companies are paying out. So telematics can truly be a savings when it comes to your premium. Another benefit is that it gives those of you that are parents an opportunity to see how your teen is actually driving. Because with most apps, you can see their routes and whether they were hard braking, whether they were speeding, or whether they were using their phone while they're driving. Remember, like I said before, distracted driving, being on your phone while you're driving, whether it's texting or, on social media apps, it's more dangerous than DUI nowadays. And that's why we're losing so many people on the freeway or on the roads to, auto accidents. So take advantage of the telematics program. The other thing I would say about telematics, most companies out there are not negatively rating you when it comes to telematics. In other words, if you do speed, or if you do happen to talk while you drive, they may not give you as much of a discount, but they're not going to negatively surcharge you. Now, there are a few carriers that do surcharge you. So make sure you're asking your agent whenever you do sign up for telematics if your company surcharges for negative results. The other thing about telematics is really as a family, like I said, it gives you the opportunity to save where you couldn't before, but not everybody has to use it. I have a couple of customers that they love the savings in telematics, but no matter how much I tell them how good it is, or how they're not going to be tracked because they're using the plug-in device. The husband doesn't care. He doesn't want to use it. He happens to be a contractor and he's out on the road every day and he doesn't want to be tracked. He doesn't want to be measured. Okay, that's fine. But the daughter and the mother do use it. And so that family is still able to take advantage of that discount. Now, when a situation like that occurs, what you're going to see is instead of being eligible for the full 100% of the discount that's available, they're only receiving about 60% or, 2/3 of the available discount. So the insurance company is still going to give you the opportunity to save, even though everybody's not using it. Make sure you're talking to your agent about these things. Lone Star Best, this is the kind of stuff we talk about every day with our customers. Because we believe here at Lone Star Best Insurance, you deserve the best. Thanks for joining us today. We hope you enjoyed what you saw. And if you did, make sure to hit that like and share button. Also, make sure to join us next time where we're going to have a few guest speakers. We'll be talking about the way their insurance package protected them, what to look out for, and make sure a bad day doesn't become a bad life. Thank you very much. We'll see you all next time.